Hello and welcome to More Talk, where it is Thursday, 2 p.m. Eastern Time.
And it is beautifully 11 a.m. in sunny San Diego Pacific time. Hey, Michael.
It's actually a nor'easter here today, Mike. In New England, the waves are really high, and the topic in our town is, which maybe we can get into today since it's an open slate, but the topic in our town is the 100-year storms are happening about twice a year now as far as ocean level coming up, and the town is deciding where to invest the money, and it's interesting. You have a lot of environmentalists that are go green when it's convenient, and then when they want to fix the fish house, it's they quickly forget about the tide coming in. So today it's being tested.
Wow. Well, it's different. Last week I was in Nicaragua where it was 95 degrees and I was in the water having a good time, and I came back and it was actually raining in San Diego. But I don't think I've actually never experienced a nor'easter. I have no clue what that feels like. I can't even imagine. So
it's like a small grade hurricane with crappy weather coming with it. And just so everybody knows, we are going to touch on UWM today because we're raw and we can, where others don't. Yes. We are going to touch on NAR. There's a new idea for NAR that I want to get to, that the real estate groups that I know of are saying this better be a April Fool's trick. So that's how much it was bothering real estate agents. But it's actually a pretty common sense idea. And then we can get into anything else that's relevant right now. And we're asking our audience to participate. So if you're on our podcast, maybe this podcast will show as you go through them. And oh, by the way, we have Susan Livingston, a hero of the mortgage world where you are from, right, Mike?
Yeah, a heroine. And yeah, she's been around. Her and her husband had United Wholesale, or what is it? Residential, not United, residential wholesale mortgage out here in San Diego. They've had it for a number of decades, actually. So happy to have her on the show.
And she'll be on with Bobby Nicely, who has built a great company, Alcova Mortgage, in Virginia. I went down to visit his Christmas event years ago. We built their mobile app, Easy Mortgage Apps, which, by the way, if you are a broker and you are interested, Easy Mortgage Apps right now for brokers is only $500 a month, and you get everything you'd get with the business cards and the co-brand and all of that. So that's something I would jump on. But back then we had the large enterprise clients like Alcova. And I joke because I landed in a plane and then I had to take another plane out to Roanoke. And so there were people putting like livestock up in the luggage above. They asked me to go out and spin the propeller plane. No, I'm kidding. But it was a twin prop. And I was like, I haven't done one of these. But Alcova is a great company, growing larger. And Bobby Nicely leads from the front, and he'll be on our show with Susan Livingston next week. But this week we got a full plate. Maybe we could talk about some ways people can make money, not just selling GSEs. You educated me today on your reverse 1031 exchange note. That was really cool from the family office, Mike. But what else you hear in the news? What else do you think we should get to before? Otherwise, we'll jump into UWM and NAR.
Yeah, well, we can get into the UWM pretty quickly here because I saw that. Have you seen that Anthony Casa has been posting on LinkedIn a little bit more lately? Not that he's completely in bed with UWM, but I think that there's a saying that goes along the lines of, was it, any news is good news as long as it gets your name out there, right? As long as that people are talking about you, that's all that matters. And I think that right now with UWM, I mean, sometimes they're the loss leaders, sometimes they're not the loss leaders, sometimes they're faster underwriting, but it doesn't really matter because at the end of the day, they're one of the top. Didn't we call them an independent mortgage banker? I mean, they are, right?
Because they are an independent mortgage banker, meaning not U Mortgage, but UWM.
Right.
And the issue here that I keep saying is, first, it comes down to regulatory clarity. The reason our industry has not been more disrupted, and the data is why it will be disrupted, when you have Facebook. Did you see this, by the way? Facebook exchanged all the data of all of your DMs in Facebook with Netflix in exchange for Netflix telling Facebook all of the play history of every one of their subscribers.
Wow. That doesn't really mean as much to me. I don't communicate on Facebook Messenger too often. I mean, I might from Facebook Marketplace, but I mean, other than that,
Well, I mean, here's why. You can now, like with a MAID device, which is your mobile identifier, and Joe Daly was talking about it on our show, but Steve Miernick from Walter Kluwer's actually introduced us to this group that's able to use the ID on your phone, and when you walk into an open house more than once, right, it knows you're there.
About this. Did he talk about it on the show, or was that offline?
Yeah, no, it was on the show, so it wasn't on the mic drop, and so that allows you to then advertise and stream in their home and mail to them, and now be on Facebook, right? All from this identifier. Now, you as a lender, you can know that you service this person. You just don't know. They still have to introduce themselves to you. That's the one piece. But you could be advertising to them, even though you don't know exactly who they are yet. And the reason I say this is the rules are getting a little more lax around data, and more people are going to be coming after that buyer. And so, one, I find it very weird all this stuff, NAR, UWM, is happening. I think we're going to be collecting dots. You know, I have that birdie in Washington, D.C. I have my theories. You'll have me drip it, but these people are too powerful to really just say it. But I don't know if this whole thing is a coincidence. I think the buyer's data might be up for grabs. And here's another one for you.
When was it not up for grabs, though, Michael? I mean,
okay,
go ahead.
It wasn't up for grabs when there was a garden around it in the whole buyer's seller's agent commission, right? That obviously a wrinkle. Our industry, and this is, I guess, what the point I was trying to make is what keeps people from disrupting in our industry is the CFPB. And I was speaking at Senator Warren's office, Markey's office, and then all of our congressmen and women. I was even on a Zoom yesterday doing it and telling them, and I've been doing this for years down in D.C., we just ask that you talk to the CFPB about regulatory clarity, because their way of regulating our industry is through announcements and enforcement. Announcements, perfect example. 2 weeks ago, CFPB posts a blog to let us know that they're going to be looking at junk fees, and then they call junk fees points going up, which was because the rates went up, right, Mike?
Yep.
Like, the reason the points go up is because you're not buying down rates when they keep dropping and yield is much higher.
Right.
When they go up and you need a point to qualify.
Yeah. I guess. Go ahead.
They were off, right? I guess that's my point. Or enforcement. And so you need to learn through enforcement. And what has happened in the broker world, and I'll pause here, but without any enforcement over there, no one knew the rules. And therefore, I think out of this, you're going to start to see some enforcement, and you'll start to know the rules on, can you give 99% of your mortgage to an IMB production business, which is pretty much 100, to an IMB, but play by the broker rules when it's convenient.
Well, I'm not even following you on that. I don't even understand that. I don't understand mathematics of how you're trying to do that, Michael. Are you saying that a seller has now the control over the buyer's commission, and if there is a buyer's agent, they have to somehow negotiate that?
Sorry, I was staying on UWM. So they found $39 billion worth of origination came from brokers that give 99% of their business to one IMB.
Right.
UWM.
Right. Brokers may be better, but they're inherently lazy. Right.
There's certain rules, right? Like that favor, you don't need a compliance team. You don't need to QC your own loans, right? If you're a broker, therefore your rates can be better. But there's some disadvantages, like you might not have access to the best technology the way certain IMBs do, unless you're giving all your business to an IMB, but from certain, and I don't know. I'm not saying I know the answer, but my guess is, first of all, it's different from each division of banks in each state, and the way you find out rules is enforcement. But I think there are some advantages to being a broker, and if you're taking advantage of those advantages, then you better document why you're not brokering any of your deals and matching whatever that definition is in your state, is all I was trying to say. And so I'm not saying, I think it's going to be a real wake-up call. I'm not saying brokers did anything wrong, but they maybe should have had a file in every file saying we chose UWM over PennyMac, even though the rates were better because their technology is better at the e-closing. And this is a really sensitive borrower, and we didn't want to be telling them, post-pandemic, they have to go here and there. And my guess is they don't have any of that documentation, and you won't know you need it till there's a blog or an enforcement.
There's always offline conversations inside of the broker office. And I'm kind of thinking, like, how do you steer a borrower to using UWM, even though pricing might be better at PRMG or Sierra Pacific or whoever, right? You're looking on Optima Blue, you see all the pricing, and let's say you're a UWM broker, and you're looking at, UWM's not the best today, but you know what? I got that relationship with them. I can call my rep and I can get this done, and I'm going to steer them over there, even though there's a disclosure that says that you've chosen 3 lenders and these are the 3 choices. And then you call your borrower, and it's an unrecorded phone call. You're saying, hey, look, there's better pricing over at Provident, but I have a relationship with UWM and your income is a little challenging. And I can't talk to the underwriter at Provident because it didn't pick up my phone call, because you don't put that on a disclosure. But I'm going to take it to UWM where I actually have a chance to talk to you, depending upon your volume that you're doing, right? And then you're now talking to the AE who is talking to the team lead underwriter or whoever, right? And then that's never disclosed on any mortgage loan document. But that stuff happens. By the way, Mary, we see your hand is right.
Yes, we'll let you up. But I do want to say, like, I'm not saying, and I know I'm not saying people were technically steered, right? I just think that market listened to Matt Ishbia speak like a college coach and rile you up. And when you had more questions, you went to your trade group run by Anthony Casa in the beginning, right? These are the people that you trusted to protect you in case there is some disclosures you should have been having. And without any regulatory clarity, there's no way to go to any guidelines and say, well, maybe we don't know until there's enforcement. And I was talking with a regulator from New York on nothing to do with this for over an hour, one of the most prominent ones. Don't forget, they can go back 7 years when they go. So you just don't want to be the one they enforce to find out about. And I don't wish that on anybody. And I just think that maybe the good out of this will be everybody starts asking the questions and nobody gets pinged, and there's just some better guidelines out of this. But hold on, but I will say, I do think that everybody was always afraid to speak up in the media or on the LinkedIn feeds. Even, I'm raw, but even me, I mean, you got to be a little careful to the number 1 producer in the country. And this article, obviously, he bought a Phoenix Suns team. He went public, and he did enough to get outsiders to start paying attention. And they don't sell technology to mortgage, so they don't mind, or advertisements and sponsorships and conferences. So they had no problem asking some questions, and I guess we'll get the answer. Hi, Mary. How you doing?
Hey, Mary. Welcome to the show. And right now you're on mute. You can unmute your microphone. Tell us what's on your mind.
Just so everybody knows, while she unmutes, this is a podcast for Spotify and YouTube. Mike and I made this a journey from last June to do this every Thursday. We have not missed one, maybe Thanksgiving, but never. And a thank you to us would be if you could go to that YouTube station, which is in my profile. You can just go to find the podcast, that one link you get in your LinkedIn, and just subscribe to it. And then we're the only ones with a live show. So we want people like Mary to come up on Thursdays at 2 p.m. Eastern on LinkedIn Audio so they can then hear themselves on the podcast. But by the way, Mary is a caller in, as I call them. So she in no way, if you're tuning into the podcast, supports any of the views that Mike and I just said. Right. Each person who calls in has their own views, and we don't have any guests today on the show that would match our views. So, but we do like to be a voice where people can come up and say what they think. And then that was another way of telling you, Mary, this is recorded, and we'll eventually hit the podcast stations.
Okay, understood. Well, I just wanted to make a point. First of all, this is my first time listening and my first time ever calling in to anything like this, but I was intrigued, and I've been in the title and, valuations, ancillary services industry for well over 25 years. And one of the comments that you made earlier was sort of like, how do we get in if there's no regulation and all of this, and they don't know it's in the loan documents and so on and so forth? Well, same for title, right? I mean, that could be said the same way. And so I remember when I first got in the industry, what is title insurance? Nobody even knows they have it. Why do they have it? It's a commodity. And even when I bought my first home, working for a title insurance company where it would have been, free to me, I had to go all the way to the back of the documents into the last section that had 3 providers listed there for me. And if I wanted to change the provider, I had to write a letter explaining why. And so I think we're kind of going down the same line of like who's on first with this. And that's kind of what made me call it in because, I can get around those things as a salesperson, but certainly, the common public would not be able to do that. And maybe not even brokerages or agents.
Yeah, I'll just say, I think we all know the industry. It's relationship. You're trusting somebody. You're trusting their tech. You're trusting their knowledge. Like the rep from one title might know another. Experience. Once these things go to class action lawsuit, and I'll tell you, I have another birdie who has a friend who says they know an attorney right now trying to get their own looking for borrowers to get their own class action lawsuits. So just like NAR happened, you're going to see a lot of, I think you're going to see a lot of copycat lawsuits here because the lawyers are the ones that made a lot of money in NAR and they're looking to make some money here. But I think the same thing, right? If you said to a buyer now, hey, would you have preferred an eighth lower if you could have got that? I think they're going to be able to get some people on to say that they would take it. Just like, would you have preferred to pay $400 less on your title? Out of context, I think a lot of home buyers are going to say that. That's what you're saying, right, Mary? Like when you're just looking on paper, no relationship, no tech, you would take the lower one all the time.
Of course, if it's got the same coverage, right? But they don't know what we don't tell them. And so to get to the borrower from a national scope or from, a bigger deal scope, and you're talking about big deals here, then really, you've got some explaining to do as to why.
It's going to be that simple. If they can explain it and everybody agrees, I think this will pass over. If it doesn't pass the mustard, then it's going to be more. And I think you're going to see another article come out. Just this thing's got some room. We have Rich Swerbinsky in the audience, and he's a big sports fan, and he knows, the Suns aren't good. The Suns are going to be more and more in the news. So I think they this thing's going to have some weight, and we'll see what happens. But
there's a serious lack of education in the entire nationwide industry. For example, in California, if you're a buyer or a homeowner, you're actually allowed to choose your own choice of services when it comes to title and escrow. And then they rely upon the customer, homeowner or buyer or seller even. They rely on their real estate agent or trademarked realtor to choose to rely them to say, well, I don't know that industry. Why don't you just choose the best one or the least costly one? And they sit there and go, well, I have a relationship with XYZ title. Or Fidelity, Chicago, WFG, or whoever. And then and that's my relationship. And unless the customer actually has a relationship with somebody, it's usually the choice of the vendor, either the mortgage originator, broker, processor, or realtor. And then if you go to an actual title rep and say, hey, it used to be well, when I started, there was a book, and you can get this book and it has all the fees on there, and you can say, oh, this is how much an Alta policy is going to be for a refinance on XYZ, and the purchase is going to be XYZ. And I'm like, if I ask for a book or an Excel spreadsheet for something like that, they're like, hey, Michael, just call me. So there's no transparency on that as far as that's concerned to what I see as far as cost is concerned. So, and I don't know why, if interest rates can be published, why can't title insurance rates be published? I don't have an answer for you on that one, but I would sure like to know. And I'm sure the customer wants to know too, because if you have to issue the loan estimate after you get your 5 pieces of information, just to make your disclosure out there, and you're like, hey, I need to get this insurance, and then you absolutely need it to coordinate with the escrow officer on your closing disclosure. Why isn't this stuff like available to the originator? Why do we have to go through escrow or the title rep just to get that information? Doesn't make sense.
Agreed. And I would say this. So we're all saying the same thing in a different language, but
Sure.
One of the things that I think WFG was really good at, and I was with them for some time, and all the big box, and also with some startups, and the advantage of the big box and this idea of global efficiency and best practices all enveloped in one, and not having siloed, systems, is basically that they were able to give bulk pricing. So it's like between this and, $250,000, this is the one fee, and you're not going to pay over that. And if it does fluctuate, we'll eat the cost. So maybe that's the way, but I agree with everything you're saying, but that's sort of where national gets out of the way of the local brick and mortar offices.
Thank you, Mary. And to Mary Page, for those on the Spotify and YouTube podcast, thank you for coming up. Please come back any week and reach out to us too about being an actual guest. But anytime you want to call in, thank you for starting the momentum on that. It's why we created this and why we use this LinkedIn platform, even though it does something new every week, like wouldn't let me add a picture to the event. But thank you, Mary, for jumping up here. I'm going to move over to Mike and see if he has a UWM comment or staying away from that one and giving us a different thought.
Yeah, I think that, in terms of UWM, I mean, first of all, I would say I spent most of my life at a lender. And when I got into the broker space, I recognized how many advantages there are for consumers. And then I recognized that none of them were taken advantage of because, as Mary had said earlier in relation to something else, none of the information is ever shared with the borrowers, right? So when you look at the comments from people that are in the broker space, it's, plainly and frankly, it's them that picks the lender. They don't share any of the decision process with the borrower. I do think that's going to change. I think if there was ever a time for one of the broker organizations to step up and be a leader, it's right now to say, this is maybe a process that we should follow. And this is, blah, blah, blah. It certainly is not going to come out of AIM for obvious reasons, right?
Yeah, I think those, for those wondering, I think there'll be an article on that. So you hear my prediction here on that. I don't think they're done. And I think anything that's traceable, these journalists are going to go after. So I think it's not a one-day storm. You said something very, I thought, intelligent. I don't remember what it was, but in the last 2 days, it was on one of the threads. I don't know if it was Greg Shears or on Diego's, but I just want to let you know, I did notice your comments, and I thought they were very well said. So love to hear it. Don't you feel like this is going to be the next NAR? Like it's going to shake up a little bit, maybe what the rules are?
I think that, to me, I have a lot of thoughts about the broker space. I think part of it is that it is relatively unregulated because states audit brokers, but frankly, the state auditors in the vast majority of states have no idea what they're doing, what they're looking at. They're looking at, they're auditing car dealers the next day. They have their book and they go through it. They don't really understand. And then the lenders are obviously audited at a much higher degree. So I think the broker space has kind of been able to run a little bit crazy. I don't think it's going to be the next NAR because I think the reality is that unless a state law dictates otherwise, I don't know that there's a law that said you couldn't send all of your business to UWM, because I think anybody in the industry will say, like I've been in the industry 25 years, they are the most organizationally and operationally efficient, effective company that I've ever dealt with in the mortgage space. So there's certainly a rationale to say, yeah, the rate was a little bit higher, but if you did share with the customer, would you rather have, horrific company A where you can save $20 a month, or unbelievable company B where you might pay a little bit more? I think that most consumers would say company B. You know what I mean? So I don't think that's going to be a big shakeup out of this. I hope that one of the organizations, NAM or AIM, comes out and creates some best practices to share that can give brokers protection on why they, I just posted something on LinkedIn on why they picked a particular lender. It doesn't have to be crazy in detail. It just has to be a process. I think the NAR thing, personally, and I don't want to steal everybody's time, but
no, we love. Let us comment on that, and then we'll let you go to NAR.
Sure. I do have a question for you, Mike.
Yeah.
Are you brokering right now, and what state are you in?
I'm looking for a job, Mike. Are you hiring?
I'm in the family office space right now. So
okay. All right. Well, I'll be a part of your family. That's cool for me.
That's awesome.
Mike, what are you looking for work? We do have a pretty robust. The people in the audience are actually pretty influential, and then I know some people.
I appreciate that. I mean, I'm looking for something I would think of myself kind of as a mortgage contrarian. I think that mortgage is
You came to the right place.
It's a very internally focused industry where, whether it's the software that software companies sell that is designed around, the user experience, which isn't the customer, or it's the products, or it's the explanation, all the way through the fact that mortgage companies don't even have value propositions anymore because they've outsourced it to tens of thousands of individual loan officers. I would like to be involved some way in helping a mortgage company swing the pendulum the other direction and go after the customers that really want an in-depth experience when they're getting a loan that leaves them educated and understanding and part of the decision process, et cetera. So that's not really a job, I know.
No, but it's one that I think as a vendor in the past, it's one that's on the top of your mind that everybody needs to get a little bit better at. And it'd be better to get it from somebody that's actually originated versus somebody that sat in a boardroom, because ultimately people sign up for the product, and then when you go to it, like, I think the average adoption of any technology in mortgage is about 33%. So, meaning 33% of your loan officers use it. So
when Mary and Michael were talking earlier about title charges, and Michael was talking about why they changed in one state versus another, the entire mortgage process is designed because nobody wants to make buyers agents angry. So the mortgage guy can't refer anybody. They can't talk further down the line because that's up to the buyer's agent. So imagine you're a consumer and you come and you want to know, well, what's title insurance? Well, Michael's exactly right. In most states, it's just in a book. Right? It's not a mystery. It's in a book. The difference between that and why it ends up being more expensive partially falls on, Mary's industry. And that's because the title agent sells them an enhanced policy, and that's a different cost, and, et cetera. That's a conversation for a whole nother world. But think about, you're a consumer fighting to figure out what your cash to close is going to be and whatever, all through the process. And it's because you got all these pieces that are completely disconnected because of the way that the referral networks work, right? Like, think how different it would be if you had one lender that sat down with you, but offered title, homeowners insurance, like did everything from soup to nuts. Your process would be completely and totally different and better than it is in this. So to me, one of the things that might come out of NAR, amongst a long list of them, is a better process for the consumer, because personally, I think that the buyer's agent role is going to get drastically reduced because some player is going to come in and start listing homes with no commission for the buyer's agent. And I think showings will be done differently. And, the buyer's agents say they're involved in writing up a contract, but in most states, it's a form that they're putting in name, rank, and serial number on. They're not writing up a contract. They're filling in a form, So I personally think there's going to be a lot of change out of the NAR thing that's going to probably be good for consumers, not necessarily just because of reduced costs, but also because it takes that referral piece out of the middle of the process and allows the process to potentially flow more naturally.
Yeah. Well, the mortgage industry itself is transparently foggy, right? Right. So if everything is designed so that the loan can be saleable upon recording. And I think that if you're looking at it, you go, okay, well, if we disclose to the borrower, if you're a broker, we disclose to the borrower that you have these three choices of lenders or these three interest rates. My relationship, I'm just interject some scenario here. My relationship with UWM is going to be XYZ better. And I tell the borrower, look, you can get a better rate at Provident, but Provident, that's going to be a nightmare to work with. So we're going to work with UWM, even though I have a relationship with Provident. And Provident has best efforts pricing that says that you can get a better interest rate by 0.375%. And I'm going to help choose your title relationship and so on and so forth. So the borrower is just like, well, I want that better rate. Yes. I want the higher interest rate. I want the higher fee. I want the higher cost. On purpose, said no one ever. And I think that, we tell
I'd say, hey, Mike, didn't I hire? Aren't you getting the broker fee to deal with this tougher company to save me?
But then that's
$220,000.
But then at least you're presenting it as consumer's choice. I kind of think that one of the problems with the industry is that everybody assumes, how many times have I heard in my life a loan officer say, my customers like to do X? Well, no, they don't. Your customers aren't one person. People buy products for a variety of different reasons, and some of them it's price, Some of it's trust and reputation of the person that referred them, whether it's a commercial they've seen for Rocket, or Johnny loan officer referred them, or Sally real estate agent. And sometimes I think they buy because they want somebody that's going to walk them from A through Z. And if that costs a little bit more, that's their prime decision criteria. That's their dominant buying motive.
Do you think?
Yeah, and I think that goes back to my view of UWM, which is, if nothing else happens, I guess what I meant by like the NAR, like changing of policy, there's probably going to have to be a form now that goes into these files that at least documents what you did as a broker, right? In choice. And I'm sure eventually people will get good at just filling it out real fast. But without having that and then sending 100% of your deals to one company, I don't know. Maybe I guess we'd need somebody on the compliance to say, are there advantages of saying you're a broker, but getting all of the lift of working for an IMB without actually officially working for it? Well, I don't work for them. I know you don't, but...
Well, two things. Number one, I sent a couple of you guys, and I posted it on LinkedIn, an example of a form that people could use.
Okay, we'll put that in our show notes when it comes online. Okay. And if there's anybody in the audience that wants to join this conversation, we have some top CEOs of IMBs. We have Dan Snyder from Lower booked. We have Susan Livingston from Residential Wholesale Mortgage booked. Bobby Nicely from Alcova Mortgage booked. We have Jorge from City Mortgage. We have Rich from Princeton Mortgage booked. Bill Lohman from American Pacific Mortgage committed. Steve Majerus from Synergy One Mortgage committed. So we have some big names coming up here, and then we have this open sandbox today for this podcast. So join the three mics up here.
You know what would be cool, Michael, is if you booked an unemployed guy one day.
Or a few unemployed underwriters or processors, or a number of those out there.
I'll throw out the, you're always welcome to come, Mike, but after this, I assume you're going to have a job probably tomorrow. So then I have to go, it's hard work finding all these people, employed or not. So here, I'm going to drop some knowledge here on this NAR program. So Douglas R. Miller went on NPR, long interview, and talked about commission cases and really caused a huge stir. And I haven't heard this take at all. But stay up here, Mike, and please, somebody from the audience, come on up and make an opinion here. I'm asking. So if there's one important thing to come out of this, it's that sellers should no longer be offering money to buyer's agents. It's a bribe. The easy solution, have sellers offer the money to the buyers in the public remarks of the MLS. Let the buyer decide if they want to hire an agent, an attorney, an appraiser, or all three, and for a lot less than they're paying them now. So when you close, you know that the seller, rather than giving 2% to the buyer's agent, is actually the 2% is going to go right to the buyer, and the buyer can then use that to negotiate all of the deals along the way, and the people will know that they're going to get paid out of that purse at closing versus an automatic percentage, putting the buyer in charge of treating every dollar like a dollar versus a, monopoly dollar.
I think that's what's going to happen by default, and it's going to be done via a seller concession, only because it's the quickest, easiest way to facilitate something that you really do need to facilitate, especially in the case of a person that has a minimum down payment. So that's all well and good. The negative is the person that's using all of their seller concession to pay their closing costs. I think that's going to be what's going to happen. And then you're going to have vendors that are going to come out and do stuff cheaper. You're going to have people that are going to show homes for $50, and you're going to have people that are going to, if you take the list of things that buyer's agents do, it's, write up a contract, show homes, whatever. Those things are going to start to be done for a low fee by people, and it'll be paid for by a seller concession.
I also think people are not, I think people like to go look at property. And so they're making the poor buyer's agent go look at 10 properties and put in. If they had to start paying $100, they'd get pretty good at Zillow and realizing that they're never going to buy a home with an attic that looks like it has raccoons in it, or whatever it is that somebody would want.
And there's already a lot of change and improvement coming to the space of the Zillows of the world, the search engines for homes. A year from now, it'll probably be mind-blowing. And you think about Oculus Quest and Apple, whatever the hell it's called, the $4,000 glasses, you don't need to go see a house anymore, because if you can put it on that, I can stay into my den and walk through it. So that technology will probably get infinitely better in the next 12 months.
I don't know. I don't want a drone going through my house, looking at my family pictures, looking at my furniture, and someone coming to rob me.
They already do. I mean, you already have digital walkthroughs on half of listings, or listings over any certain price where it makes sense to pay for the extra photography. So you already have
that might be appraisals too, right? Like, by the way, Bellix Valuations is the number one appraisal firm out there in this country, and we're seeing a big movement of people going direct to these appraisal firms, W-2 appraisers. They're a sponsor of this show. I didn't run the usual ad because our opinions are nowhere near their opinions, and this one's been sort of a lightning rod episode. But the ability to have a firm and W-2 appraisers and the appraisers actually getting paid what they deserve, I think there's just a lot of great reasons every lender should at least have a conversation, whether they're using an AMC or a direct desk. But, I guess I could see, I don't want like a drone going through. The only reason I kind of said this jokingly to you, Mike, is if you're going to be selling the house in 30 days, by the time the bad guys, get the crew together and draw out their plan, in a garage with a bunch of empty cans and rocks, you should be long gone by then, right?
Yeah, I mean, you already have that today. Like, if you go on a lot of listings, there's those little white circles on the floor where you step on each.
I meant Mike Zhao, right? Like, they're not gonna. If you're gonna stick around, with how can they? If you're gonna be selling and moving, by the time they come to rob the house, you're on to the next one, right?
I guess. I mean, I'm just thinking more of like, if you like in San Diego, median price is just over $1 million right here, and for example, there's certain neighborhoods, your average price is going to be between $2 to $4 million, and now I'm not a thief, but if I was to become one and I wanted to rob a house, I'd be looking at those maps. At least that's for me, just as a general homeowner consumer. I'm just thinking that in the back of my head, even if I wasn't a thief. I mean, I as a consumer, I'm just scared. I don't like that. I mean, I don't like AI in general. I'm an anti-AI guy right now, as far as getting into my personal business, things like that, as we talk about Facebook. But anyway, I digress.
Welcome. My name is Bill Nye. I'm one of the premier listing agents. This house is owned by Michael Zhao. Oh, excuse me. Please put your phone in that basket by the front. We don't. And tell your what's that? The new listing buyer's agent type. Okay, have them put their phone in there. Mike does not like pictures in his house. Okay, come here. Let me show you this beautiful kitchen.
I don't mind. Yeah, I'll get on Zoom and I'll get on a Teams call and get the camera going, but I will not have you film my house. You're a crazy person if you're thinking that. But I think anyway, I want to talk about the consumers. Do you think that the consumers are a little bit more educated now? Do you think they're going to pull up the UWM article, read what Matt Ishbia is going to be talking about I think he put some 4-letter words regarding either borrowers or homeowners, and now there's a class action lawsuit that's going to be coming about from that. So do you think that the homeowner borrower is going to be reading that and thinking that because they fund so many mortgage loans, that even though he doesn't represent the entire industry, he speaks for the entire industry as a result of his comments? And that's why that the class action lawsuit that is supposedly supposed to happen against UWM could be happening. Did you get a chance to read about that?
Yeah, no, I told you. I know somebody there are going to be more lawyers, that there's no rule that a lawyer can't find a couple people that feel that they would have paid a lower rate if told so. So I don't think the class action lawsuits are going to go away. And I don't think, whether they read the article or not, the better the Phoenix Suns do. I mean, this was on sort of starting to get on the fringe of ESPN. To me, this feels like, so Dave Portnoy in our town is Barstool Sports founder.
Sure.
He decided to do Davey Day Trader, right? And he went on the Reddit thing and did the GameStop to the moon. Stocks only go up, Robinhood. And because he has such a following, it was destroying people with short bets, right?
Mm-hmm.
And then hit piece after hit piece came from Business Insider. I've seen Matt Ishbia on CNBC tell that Joe guy on Squawk Box that the investors don't matter because they don't get it. He's winning.
Ishbia, I mean,
some part of me thinks, that this isn't about, this goes bigger. I think he upset some people in the investment world. And just like they got a Barstool guy, it's going to be even easier and more money involved to get the guy who owns the Phoenix Suns. And, that's my view. So I think.
By the way, is UWM a member of the NBA? Do you know? I haven't looked it up.
Yes, I think that's the other problem. Like, they are an IMB.
Are they a member and are they representative?
They are, because I've seen them sponsor some stuff, I think, but they are not active as far as if you were going to go after the mortgage industry, going after Matt, he sort of lives on an island, in my opinion. Like, I don't cross too many UWM, and I cross thousands and thousands of people at these conferences. So why don't you start with someone that him and his peers, AIM and U Mortgage. I was on as far as MBA events, I don't see them. It's almost like they try so hard not to be an IMB because that's how they really came to life is, the brawl, don't let them service your loans. Brokers are better. Findabroker.com, which did you see on they did remove all that media, which wasn't a good look because they took out the part that the Findabroker.com sponsored by UW. Did you see that part?
I did not see that. Didn't look it up. I got busy this last day.
So they, in many of the Facebook broker groups on the Super Bowl commercial, they had to put, from a compliance standpoint, powered by UWM, I think,
right,
from marketing.
Sure.
In all the other videos, that frame is conveniently not there. And how you show up in findabroker.com was driven by whether you gave deals to them. And so that came out in the article, and then now they're all taken down. But I guess there's like I don't know. It seems like that group has ways that you can bring up old things that were brought down on the internet. So that's circulating. Yes, I do think it's going to be a bad hit an unfair hit for brokers, just like the financial crisis wasn't very fair for brokers either. They took the brunt of that
I'm waiting for Ishbia to go on either CNBC or on one of the news rags to actually say something about the throwing stones, and he lives in a glass house. So I'm wondering when he's actually going to say something about it or do something about it. Something's got to give. This doesn't make sense to me.
He'll stay in his world, stay away from those questions, especially in the media. I mean, I don't think he'll get a fair question, right? So he'll stay where they're fair. But the whole Phoenix Suns thing makes it bigger, right? Because he went out, did this, and I'm not saying this is really anything, but he did what the article said, which is rally up brokers to give him business, then come out with this way that says we're going to sue you if you give certain other people business, followed through on that, then went public, so kind of came out of the mortgage sandbox, then leveraged the money that lawyers are telling consumers, came out of their pockets, right, to buy the Phoenix Suns. And I don't think he's paid back that loan to the stock. So if you're into reading those type of stories for a mortgage, I mean, it's about as sexy of a read as you get, right? And so that means it's going to get coverage by the consumer. Because I pitched easy mortgage apps to people as a mobile app, and mortgage is very confusing and people lose their interest very fast. But when it involves sports teams and lawsuits and stuff, people that reads like a novel.
Oh yeah, give me the latest tea, and we'll be able to run far and run fast with that. I'm waiting with bated breath on trying to figure out when he's going to come on and what he is going to respond. Come on, Matt Ishbia, speak to us. Come on to our show or speak somewhere at least, because everybody, inquiring minds, want to know what is on your mind, since they're talking so much trash about you, not necessarily your company, because your company's coming out looking like roses right now. You have great turn times, great service. Your people are doing a great job. It's you that's not looking so hot right now. So I'm very curious to hear about what he has to say. That's why.
Yeah, I mean, that part's true. It really is him. Like, the people raving about UWM, they're saying it's worth the extra money to deal with. Like, I know, I did a lot of focus groups, right? Especially during the Clubhouse era with brokers on technology. So when Encompass came out with TPO Connect, which a lot of the competitors were on, the problem that Home Point, and I think PennyMac was on it, and is when someone's in a file in Encompass, whether it's retail or TPO Connect, nobody else can get in the file.
Correct.
A lot of people know that in our industry, right? So why it was so problematic in broker world is if the processor at this wholesale company was in the file, the loan officer couldn't get into it. And in broker world, those are two different companies. And if I can't get into a file because somebody else is at another company's in it, and then they go to lunch and I can't get in it for 2 hours the day of closing, that didn't happen with Blink and that didn't happen with UWM. And that was the first one to not experience that. And I think that was it. So it really was a technology play because, yeah, you paid a little bit more money, but if we needed a rate lock extension, then that would have been more expensive. And this group, I don't trust in the final hours. You also, in their product, they used AI before anybody to handle updates, like really at the closing table that were within the limit of not having to redisclose and be able to get those closing docs out within like a half an hour, whereas a lot of the other companies' turn time could be like a day. And that was huge. Especially purchases, refine. I mean, this is for some people, it's money. For some people, it's you got moving trucks and you got everything lined up. So I guess what I'm saying is I think you're right. Their brand has done a lot of great things. This seems to be hurt the stock through going after the Matt story.
Is this, with the Federal Reserve kind of telegraphing that they're supposed to be lowering interest rates and in theory, mortgage rates are going to be following suit. Is this good for the industry? Really? I mean, at the end of the day, does it bring more notoriety to the broker channel versus the retail banking channel? And if the consumers are going to start reading about brokers being better, UWM, and then other retail companies start, and this is hearsay and conjecture. This is not there's no factual things with what I'm going to say here. But if I'm, is a retail company going to say, hey, you know what? Yeah, the broker channel, the leader of this broker company says, screw the consumer. And if you're going to work with a retail company, brokers may be better for rate, but we're going to offer you better service, better, I don't know, something. Maybe it might be better pricing because if it's a purchase file or something like that. I don't know. But is this good? Could this be good for our industry when it comes to the broker channel versus the retail channel is what I'm saying. And I don't know the answer to that question.
I don't think it's good. Like, I think this is going to be bad for a while for consumers because class action lawsuits are not like, it brings up a lot of articles about it. And these are real people. And now you're talking real consumers. And I think it's going to hurt. It's not fair to the broker. But at the same time, I do think it's good for the broker channel because, and I was telling this story the other day about like, if you have parents around a pool, and you have some parents that like to party a little bit more, and I don't mean like overly, but like to have a couple beers and hot dogs. And then you have some that just hover around their kids because that's how they are, protectors. I might be somebody that at the party is now not only at the pool watching my kid, but watching 4 others because I'm so nervous and I would love to go up. And I think that was the broker space, was the risk adverse people were being hurt so much by this UWM aim, like if you ride this wave and you do it this way. And I think there were some brokers, and we need a compliance specialist because I can't put my finger on it and somebody else can explain it better. But there are a lot of brokers that believe you do need to spread out among, to be called a broker, you do need to give some deals to 3 to 5 different wholesales, or you really are acting as if you're an IMB. And you might say you're not, but you're not passing the sniff test, and therefore you're gaining an advantage in markets and being able to offer better rates and better stuff while kind of taking the name broker. And I think a lot of brokers felt like to earn the name broker, you really need to give deals to multiple companies. And so those people, I think, are the people at the pool around the kids that now say, finally, we can get some regulatory clarity, which is how I began this, on what the rules are. Because if we're going to let them do that, then fine, I'll start doing that. And I think that is really good for the industry. And I think for the people that have done it right and are just so risk adverse, which should be celebrated in this industry, they deserve this. They deserve some clarity. And I think they're finally going to get it. And I think anytime they spoke up in the past, it wasn't an environment where they could feel comfortable, whether it was I think the Facebook trolls over there are like relentless. I really do. Whether it's a technology or a bad thought, I think it's a hard world over there. And we are a regulated industry. We have to have some sort of decor to us. You know what I mean?
Sure. Well, we can talk about that later. I'm waiting to see which news outlet's going to come out and actually have an interview with Ishbia. I'm not sure if it's going to be Housing Wire or National Mortgage News or Axios. That will be interesting to me. And I'm excited to see, or interested. I wouldn't say I'm excited. I say I'm interested with the curiosity on how this is all going to play out. But it was a great show today, Mike.
Yeah, it was. Mike had his hand up here. Mike,
I was just going to say, as a broker, I think I was licensed in 25 states. The only one that I know of that asks how many lenders you send to, and obviously they get your, the other thing I was going to say is, I think we all know what's going on. I think if it wasn't for the little bit of NBA angle, the press isn't going to, the regular mainstream press isn't going to cover this, so your neighbors aren't going to know anything about this. The only thing they're going to ever hear is going to be, to Michael's point, is it's going to be, if they hear anything, it's going to be brokers bad news, brokers, because they're not going to dig enough into the story to understand what's going on.
I think every sports fan in America will know what's going on, because I think the next story that drops has more bones in it, juice in it. I mean, there was 3 articles on ESPN yesterday. Now, Dan Gilbert played Ishbia last
Yeah,
night.
that's what I'm saying. If it wasn't for that little, because mortgage isn't something that's typically, for years I worked at a lender and always said the most influential person in mortgage is Matt Lauer, because unless he says, hey, rates are down, nobody even knows it's a refi. You know what I mean? Like, it's kind of one of those things that the general public doesn't see much of. But I agree, the sports angle's got it out there a little bit.
And he still owes, I believe the MSRs he's owed against. I don't think he's paid that back, right? So he still owns the Phoenix Suns on the back of UWM. And Phoenix Suns are going to be one of the hottest teams out there in this playoffs, because they got Durant, they got Beal, they got...
I'm sure he margined his stock.
He did. I think he margined 60% of his stock ownership is the number. We'll get the article. We'll put that in the comments. And this was fun, Mike, because I like we built the back of the show on this, but when we have IMB presidents, it's hard to kind of. But they've been really raw. So if you guys listen to the podcast, there's been some really, people are saying they were really raw. I don't think they've gotten enough viewership, but I think having yourself searchable on a podcast is pretty cool, and I think those IMB owners will love it in the future, because they all came out sounding like roses, and I think people are looking for some authenticity. So I hope when Matt goes on an article, Mike, I hope it is authentic, and because we're a little sick of feeling like it's somebody he might have paid, to sponsor the softball questions, but that is the world we live in. So
as Greg sure pointed out, we're not paid, so we speak our mind. We don't care.
Exactly. Thank you, everybody, for tuning in. Please join us again next Thursday at 2 p.m. Eastern, 11 a.m.
Pacific, out in San Diego, of course.
This is More Talk.